What's up, everyone? Welcome back to another stock review. So today, another Russell 2000. One of it's going to be the Comfort System USA Incorporate. So it's called the Fix. It's completely different names. It's kind of hard for me to find information. But hey, without further ado, let's get right into it. Over here for Fix, we can observe a pretty nice trend just surging up until 700 USD already, and we pull back to see the market actually it's performing pretty well throughout the history, and it's in a long-term uptrend. So could this finally be one of a high quality stocks that we are looking for? We'll be going through the financial statements as well as the business model and economic modes as well. So to look at this, right, we also observe a really gap up during its recent quarters as it beats the earning pretty well, and you can actually see from the year of beginning or ending of 2023, it has been going up almost 350%, 3x, 4x. It's a pretty good company from what I observed from the stock price. So without further ado, let's go to the revenue. In here, we can observe a really decent increasing form of revenue showing signs of great business model to increase their growth and provide predictable sales in the long run. As for their net income, it's also in the form of pretty well increasing net income, and for the recent quarters just keep on creating all-time highs in terms of net income. As for the free cash flow, the value is also very significant good, and it's just in the form of increasing. So after looking at the front parts of the fundamentals, is kind of saying that hey, the sentiment of this company is a very good company that's very predictable, consistently provide growth, sales, increasing net income, positive free cash flows. Is just that really this is a good company or not. We will be further looking into it. And here we'll be looking at what does Fix or Comfort System USA actually do. They are leading specialty contractors in mechanical and electrical construction services space. Delivers HVAC, which is heating, ventilations and air conditioning, plumbing, piping, controls, off-site construction, monitoring, fire protections, as well as systems across the United States. So for their stream of income, they as we mentioned, they do HVAC, meaning that they do mechanical services, larger segments. They do electrical services, full electrical contracting, power, lighting, communications, growing importance due to the data centers, the hospital, as well as tech facilities. I do think one of the driven factors is going to be the data centers. And also we have modular constructions with off-sites, prefabrications, built modular units, rooms, cooling units, services and maintenance contracts, ongoing services contracts for what they have done, the plumbing, electrical connections, HVAC, and they also have being affected by the technology as we mentioned. A major growth driver provides advanced cooling and power distributions. So 40% of revenue came from technology and data centers, up from 31% in 2024. So the demand is constantly increasing due to the fact that AI is a trend in the market right now. And what is AI? Basically, it's just data centers. We need a lot of data for training the models. More electricity and infrastructure and facilities are needed. That is why this company shows a very strong in terms of their net income as well as their revenue. So basically, this is the revenue mix. They have 60% in terms of their mechanical, 20% of electricals, and others including the constructions, recurring maintenance services, which consists of 10 to 15%. So from what they do is actually what we so-called 刚需is very necessary. It's a need to the services or the consumers in today's world as well as today's trend. For their strengths and weaknesses, the strength including their diversified services. They don't just provide mechanical or constructions, they also provide ongoing servicing, maintenance. They have data centers and AI boom exposure, and have recurring revenues for services contracts, yes, backlog growth, modular construction capability, strong financial performance, as well as scale and national presence. So they are all over the US. As for the weaknesses, they are actually cyclicality of construction market. So a large portion of business is still dependent on non-residential construction cycles, and any economic downturns can delay it. So they are more towards like business model instead of like residential. And they also have data center dependency risk, labor intensive business, competitive industries, such as the MCore and Quanta, and project execution risk, thin margins versus tech companies, as well as capital intensities. So they actually requires a lot of capital for their ongoing investment in terms of their equipment, plants, workforce training, and so on and so forth. So basically, that's a lot of blah 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 about their strengths and weaknesses. But then overall, through the numbers, through the financial status, hey, the company is actually provide a great returns from the reading. So let's go into the ratio first. Over here we have the net cash. We can actually observe a positive net cash during the year. It's not as high as the previous years, but it's actually higher, more cash and low debts, so it's actually a very safe company to own, and hoping that this kind of a situation will keep on going. As for the ratios, we have the PE ratios, PG ratios at less than 1, and also debt to equity ratios very low, lower than our criteria, which is 1, as well as further lower than 0.5, which is actually pretty decent. ROE, increasing ROE, staying above 15%, and ROIC increasing, staying above 15%. So overall, this is a very good company for what we have going through for the financial status statements. All that is meeting our criteria, and for the business model, it's actually quite versatile as well, diversified. They provide a wide range of services, and especially when it comes to market whereby there are trends and major in AI, which needs a lot of infrastructure facilities for data centers, and it's kind of like meet the demand and have high demand to meet for their sales, increasing the income of this company. So lastly, we'll be going through the economic mode score of fixed, and from here the value of, you can actually see, it's actually quite decent, 7.8, 7.8 for economic skills, and overall the final score is at 7.6, almost hit 8, but the score is actually good enough. And for other analysis, we have Morningstar's saying that it's actually a narrow mode, seeking alpha, that the company has built a wide economic mode based on their scale, which I do agree, which is very huge. And medium analysis and value investor highlight the company's durable competitive advantage through its series acquisition strategies. Many still classify it as a narrow to moderate mode, but based on our score, it's actually a moderate mode, so pretty close to wide mode of 8 scores. However, I do think that this company is still a very good company which provides, based on the financial status, it's able to provide good returns and good profits. So after looking at all the situation, right, do we actually finally found a high quality company? I would say somewhat yes, but then the price of this stock market is very high off, and it's just creating all-time highs and staying at the ATH as well. So if I were to buy, for me, I will wait for it to discount until it touch the 200 MA or a 30 to 40% perhaps. But right now the situation is the company is very expensive. So for my situation, I would wait and see if this company is able to come back down or pull back without affecting the ability of the company to earn more money. And yeah, I would just buy it at a cheap price. But hey, if you are interested in this company, you can further go into details of what they actually have been doing, what is their percentage of their weight in this current market, and just do your due diligence before you make any decisions. Don't just base on this video. This can be one of your reference, but do go do your research before you make any decisions. Then for my video, it's not financial advice, and I do think that this company do have more potentials. However, it's just a very expensive price and might need some time for it to pull back or to be at a discounted price before I actually get into it. So I guess that is all for today's video. It's a very good video because I finally found something that is have positive values in terms of all the financial statements. However, it's just that the economic mode might somewhat miss out to be a moderate almost a white mode, but hey, we will be able to see whether or not if once it pullbacks, it's because of the sentiment become bearish or the company starts to lose its ability to generate more profits, and from there on we will be deciding whether or not if I want to buy or just leave it as it should be. So I guess that is all for today's video. Please do your due diligence before you buy. I guess I'll see you on the next one. Support it by subscribing the YouTube channel, give the thumbs up, share the video, and I will see you on the next one. Goodbye.